much for tuning into Talking Point. I'm your host, Neeraj Shah. While some of the issues that cropped up in quarters have been guided to by management, there are a set of new developments that are coming up for almost every company in the Indian manufacturing space in quarter two, faced by them in the quarter gone by. And the questions to even our current guest today, which is Dr. Satyanarayana Chava of Laurus Labs, is to talk about whether some of the issues that cropped up in quarter two were an aberration. Can they last for a bit longer? How much of an impact can they have? And of course, as every conversation with Dr. Chava goes, talk about the opportunity at hand as well, because that's what you do with growth companies. He joins us right now. Dr. Chava, great having you. Thanks for joining me.
Good morning, Neeraj. Thanks for talking to us in the Talking Point by BQ. As you mentioned, all companies are going through some kind of challenges as well as opportunities during the current period. Especially for Laurus Labs, our ARV API sales were lower than what we anticipated at the beginning of the financial year. But one has to look differently. You only look at the problems, or we look at the challenges and opportunities in front of us. In 2017, over 80% of revenue comes from ARV APIs. In the current quarter, less than 30% of revenue was contributed from ARV APIs. That's a positive sign. And we also added significant capacities. We validated several products. And we also signed a long-term agreement with a global life science company for development and manufacturing of a portfolio of niche APIs for them. So there are a lot of opportunities ahead of us. And at the same time, the drop in ARV API sales is not going to be a phenomena which will be there for next several quarters. We do hope by end of Q3, the ARV API will come back to the normal, as we also mentioned in our conference call. By Q4, we will very confident to have sales similar to Q4 FY21.
Okay, let's dissect all of these piecemeal, because you're not just ARV APIs related company, but I want to talk about all of those. First, let's stick to ARV APIs. It's a bit of a conundrum for me, Dr. Chava, because while you say that you could see a turnaround in Q4, is this a question of channel destocking or normalization of demand, or a combination of both? And while there could be a comeback in quarter four similar to Q4 FY21, can Q3 be a mirror image of what's happened in quarter two? Is it difficult to say that as well because of limited visibility that you may have because of disruptions? Or could it be worse than what's happened in quarter two?
In the last year, we had a significant increase in ARV API sale. And during that period, we also noticed not only Laurus Labs, but other manufacturers, formulators, are shipping multi-month dispensing bottles. That means instead of 30s, they were shipping 90s and 180s. That led to some increase in demand last year. Now, hindsight, we were thinking the huge demand last year because of multi-month dispensing. Now that is being normalized. So nobody will dispense 3-month bottles every month. So that is the normalization happening. And we are seeing some increase in request for ARV APIs. If you look at our ARV APIs was the challenge for us, not the formulations into LMIC. That we did reasonably well. So we do hope by end of Q3, things get back to normal. And we do hope Q3 will be very similar to Q2. But there are a lot of opportunities we are seeding and nurturing in right now. So those will have a significant upside for us in the coming quarters as well.
You're talking about opportunities in APIs or somewhere, or the other businesses?
Opportunities in APIs, opportunities in CDMO space. Okay. These two are very, very interesting. And next year, FY23, we do hope our formulations will also reach a new heights in servicing customers, regions, as well as products.
Okay. No, I'll get to those businesses in a bit, Dr. Chava. Just a couple of follow-up questions, really. So your presentation at the end of Q1 had said that other APIs, including series and diabetes portfolio, had declined about 43% YOY, I presume, due to change in the delivery schedule for certain shipments, and that you had expected recovery from Q2. Now, I'm guessing it may not have transpired as fully as expected, as you yourself admitted, at the start of the financial year, what you had thought, some of the things have not transpired. So do you expect that some of those delayed shipments of Q1 as well will take shape in Q3 and support, or would the overall picture look similar to Q2, irrespective?
No, our other API sales will pick up from Q3 onwards. It was also very visible from Q1 to Q2. We increased our sales from almost 77 crores to 116 crores, other APIs. So there is a significant increase happened. See, here other APIs, majority of revenue coming from CMO of generic APIs. So we have to deliver as per their schedule. So generally our Q3, Q4 are much stronger than the Q1, Q2. If you look at most of our CMO partners have been financial year starting January to December. So they pick up most of the projected volumes in Q3, Q4 than in Q1, Q2.
Okay. Fair call, sir. Let's talk about the other businesses. And you've done very well in the other segments, or reasonably well compared to maybe, and relatively much better than what APIs have done. But talk about what transpired in Q2, what could happen in Q3. We'll get to Q4 later, but what could happen in Q3? And you spoke about the opportunities that you're seeding in those businesses. Please tell us about those as well. It can be a long answer, no problem.
Q3 will be very similar to Q2. See, any company, any transformation will take several years. So to start development of a project to commercialization will take anywhere between 3 to 4 years. So any company says we are transforming in next quarter, it is very challenging. So we are in the another wave of transformation, as we mentioned. By 2025, what was the Laurus Labs in 2020 will be different in 2025. So we are working in the direction, and we are very committed to do the transformation. We are also very bullish on what is in front of us. When it comes to other segments, especially ARVs, as you mentioned, we'll get back to normalcy from Q4. We have Q3 itself, we have seen some positive trends coming from our customers asking for deliveries. And when it comes to other APIs, CMO, in generic space, the pace has picked up, and Q3, Q4 will be better than Q1, Q2. That's the trend for us in the last few years as well. So oncology is doing well. We are doing good. We are adding more capacity in oncology API manufacturing as well. When it comes to the formulations, we are building a 5 billion new capacity, which will go commercial. I don't want to say commercial, it will be validated during the current financial year and ready to supply commercial quantities by June next year.
Yeah, so I think 1 billion is probably live now, and if I'm not wrong, another 4 billion by the end of Q4 and maybe 3 months. So you reckon a better part of FY23 will see the full commercial impact of the FDF capacity. Is that a fair assumption?
Yes, you are right. We did add 1 billion tablet capacity by debottlenecking, adding one more line in the existing building. But the new building is coming up very well. And that building, we are finishing in 2 phases. One phase will give 5 billion, and another phase will also be another 5 billion. Eventually, the unit 2 will have a 15 billion capacity from 6 billion right now. But the remaining phase 2 of the current expansion, we are not planning to do in 23. Maybe we'll do in 24.
Okay. Fair call. And is there a reason why? Is it a demand-led thing, or is it spacing out capex because you're also doing Laurus Bio, CDMO, etc.? Why is it that decision to postpone it a bit?
We're not postponing. That is the plan. The plan is to finish the phase 1 by FY22 and then do phase two in that brownfield capex starting maybe end of FY23, we'll start putting new lines. We are completing the building, but we are not adding lines. So each line qualification, commercialization will also take significant resources from operation. So we are doing in a phased manner. That is the plan. We didn't change our plan.
Okay, sorry. I was under the impression it was happening somewhere in mid FY23. Maybe I'm mistaken. Excuse me for that, Dr. Chava. A follow-up question on CDMO. It is doing good. I think you've said in a con call it will do better, probably about 15% of sales or what have you. Irrespective of the exact numbers, please tell me, Dr. Chava, because when so there are people who expect this business or this to be their big savior in a hurry. And there are some people who believe that this is not an overnight transformation, especially CDMO. It takes time, but when it actually delivers, there is a very steep J-curve hockey stick effect that comes into play for the organization and for the business itself too. Can you talk a bit about that? I know you've spoken about it enough, but since at the end of Q2, there has been a bit of a disappointment on the other aspects. I think people will be seeking to understand more about how is it that the CDMO game plan will unravel. Can you talk a bit about that?
The CDMO, we are in this business for the last 10 years. And the drug development cycle itself is anywhere between 6 to 10 years. You can't expect to have a project start from preclinical to commercialization in a short span. We are in the race. We have very good opportunities. We have good clients. We have good projects. See here, we can't service 50 big companies. We are servicing 5 out of 10 big pharma in this space, and we're happy with that. And we have to go with their clinical program movement. You can't make a phase 3 quantities when molecule is in phase 2. Yeah. So we are very well paced there. And as you have seen, our growth in CDMO is much bigger than other segments, and we do hope that trend will continue. And our recent contract manufacturing agreement with Big Pharma demonstrates we are a right partner for a long-term manufacturing. See, nobody signs a 10, 15-year contract unless they are comfortable with our quality, with our regulatory track record, with our sustainability initiatives as well. So we do believe these initiatives and these kind of agreements will also bring other customers to go for long-term agreements with us. We are very bullish on this segment, and we are investing. As we mentioned, we are putting up a dedicated R&D for this division, which will be done by end of 23, end of 22 actually. I'm saying FY23. And we are also adding 2 new manufacturing sites for this. Right now, the CDMO doesn't have a dedicated manufacturing space. Between generics and CDMO, there is always a kind of a competition who will get the allocation. We don't want to have that kind of a scarcity approach in capacity. From scarcity, we want to move to abundance, because CDMO opportunities will go in waves. So nobody will take, suppose a customer needs 1000 kg, he will not take 100 kg a month. He will need 1000 kg delivered in one go. So we are creating large capacities for this division, which will be very handy for them to pitch for much higher businesses from the existing partners.
Fair call. I'll have a slightly detailed follow-up on all the businesses put together and the cash flows thereof. But just one quick question. Laurus Bio, you say it's a very nascent size. So you doing more top line in H2 than H1 is probably understandable. But someone made this point, Dr. Chava, and I would want you to comment on this. The comment was this, that investors might be discounting, quote, investors might be discounting Laurus Bio growth too soon. It has taken each and every bio CDMO player in India at least 1 decade to start doing new biological entity CDMO. And they give an example of Syngene's Stelis. Even when Laurus Bio grows, it will be in the lower value products. Quote finish. Would you comment on this, sir?
As we are elaborating in our previous calls and meetings with investors, our initial opportunity with Laurus Bio is to do recombinant therapeutic proteins for food. Recombinant proteins for food, not for therapeutics. We made it very clear. So we are seeing a lot of CMO opportunities for food proteins right now. And what you mentioned, the code is absolutely right. Somebody has to make a pitch in therapeutic protein CMO space. At least they need between 5 to 10 years. We are not pitching that. We are pitching currently selling cell culture ingredients and also pitching for CMO for food proteins. We are finishing our qualifying and commercializing 2 more fermenters in the R2, and there is a lot of demand for that. Actually, we thought we will give that 4 fermenters to 4 clients. One client itself is asking all 4 fermenters for next 12 months. We said we cannot give you, and we are planning to add a million liter. That is a leapfrog for Laurus Bio. When we acquired, they were having less than 20,000 liter fermentation capacity. Now, by end of this quarter, they will be commercially utilizing 180,000 liter fermentation capacity. We are already thinking to put a million liter fermentation capacity.
Sure.
Food protein. So your statement is right, and my statement is also right. Therapeutic proteins, people need 5 to 10 years. For food proteins, the cycle time is much shorter than the therapeutic proteins.
Okay, and therefore the growth path for Laurus Bio could be slightly different than what it has shaped up for some of the others in the last decade.
We do believe so,
and it could happen at decent margins as well. It will not happen necessarily only in low value products.
Margins are very good. See, what we have seen right now, the margins are comparable to the NC CDMO.
Okay, fair call. Now, a couple of slightly detailed questions. I have 4 or 5 more questions, Dr. Chava. It will take about 10 minutes, but I urge you to stay with us. First, you embarked upon a partly debt fueled but partly cash flow fueled expansion plan across all your segments because there was demand thereof. My question to you, as things stand right now in a slightly disrupted world, do you reckon that you might need to go slightly slow or need to juggle the hats a little bit because of what's happened Q1, Q2, Q3, and therefore what may have happened to cash flows? Or would you believe that you're so convinced about the growth trajectory that even if it's debt fueled and further debt added, you might still be tempted to stick to all the expansion plans that you've given before the world got disrupted as we know it?
Any disruption, any challenge is also an opportunity. See, to putting up a capacity and qualify, put into commercial use, it is a 24-month process. And our strategy from the beginning, build capacity and ready before the opportunity comes to us. We do believe what we are doing CapEx is good for us, and we have very good visibility to use that capacity. And also, most of our CapEx is funded through internal cash, some through debt. And even debt by EBITDA, we are not that leveraged. So we are very clear not to leverage the company while we spend judiciously. See, without putting capacity for us, how we will grow unless we acquire companies? That is not our philosophy to acquire companies for top line. We know we will put quality facilities and run those very efficiently. So our capacity expansion is going on schedule. And next year we'll invest into CDMO dedicated facilities as well. We are not taking some pause in our capacity plans. As we mentioned in the investor call, by end of March 2022, we will have enough capacity to reach our aspirational goal of $1 billion.
Yeah. No, Dr. Chava, please don't misunderstand me. I'm no one to question you on how you should proceed with your business plans. I was just asking, you are the pioneer of a successful company. I was merely asking if you believe that the disruption in the recent past and one which may linger for a bit longer, does it compel you to change the strategy? I'm guessing the answer is no.
The disruption may continue. Nobody knows when the COVID-19 pandemic ends and then things get back to normalcy. But healthcare is not neglected even during this pandemic. There's a lot of focus on healthcare during this. And our major focus on ARV, oncology, diabetes, cardiovascular, these medications will have their demand without much disruption. That's what we believe.
Sure, sir.
Yeah.
No, would quarterly cash flows getting slightly misaligned from what you would have thought earlier, does that compel you to change the strategy or no? That was my larger question, really.
If you asked me this question 2 years back, answer is yes. If our cash flows are disturbed by 200 crores, that was 40-50% of our cash flows. Today, our cash flows are disturbed by 200 crores, that is 10-15% of our cash flows. So we have the ability to withstand the some kind of challenges, but this we do for long-term growth. See, we are not changing our business plans or capex plans because there was a challenge in Q1, Q2, like that. So yeah, I hope I answered your query, Laurus.
No, you did. I mean, this is what I wanted to know. Now, the follow-up to the numbers that you mentioned, Dr. Chava, and I have a two-part question there. You've reiterated in this interaction as also in the call that you're confident of hitting $1 billion USD by FY23 end. Now, just some numbers here. You've done about whatever 1287 and 1200 odd crores quarterly in Q1 and Q2. Now, would Q3 show some signs of top-line revival? Maybe hitting about say 1600 odd crores, because I think that's the average. The reason I'm saying this is, Dr. Chava, is that if you don't do about 1500, 1600 crores in quarter 3, then the ask rate on quarter 4 for hitting 5500 crores is very large. And if you don't do 5500 crores in FY22, then the ask rate for hitting $1 billion in FY23 is very large. I'm just trying to understand from you, sir, how do you think the run rates happen? Just so that we get some comfort.
We do strongly believe our run rate from Q4 will be good and will be in the direction of our aspirational goal. And we have a lot of approvals pending for Europe and US, and our capacity will become operational by then. Q3, as we mentioned, it will be ramp up will be there, but we will not go back to the quarterly ramp up what we have seen in Q4 FY21. In Q4 FY21, we did little over 1400 crores.
Okay.
That we will cross in Q4 again this financial year, Laurus. So you could presume Q4 onwards we will be having a very good run rate.
Got it. But so Dr. Chava, I would reckon that would mean that let's assume that in Q4, because you did about 1400 odd crores, right? Q4 FY21. Even if you do 1400 crores with a very normal quarter 3, I'm guessing then a big bump up in revenues is what the analyst community should expect in FY23. People are right now getting bogged down by looking at the quarterly run rates and saying that how will they do $1 billion? What if there are some FDA issues that crop up, etc.? You reckon that don't look at necessarily Q3, Q4 mirrors Q4 FY21, and FY23 is the really big bump up here.
See, revenue growth comes from product launches and capacities. And if you look at our FY20 to FY21, we grew significantly. And not only FY20 to 21, we have demonstrated in previous also, some years we grew 60% year on year. So you can't take step every year. So we can take a quantum leap maybe once in 2-3 years. So we are gearing up to do that.
Sure, sir. No, that's the only similarities. The way the cash flows of 200 crores don't matter as much now. The base on the revenue front is also much larger than what it was then, which is why. But I take on board the point. Maybe FY23 is that step up here, and therefore people should watch out for that. So FY22, I now have some clarity about what you likely do. You maybe touch about 4,500 to 5,000 crores in FY22, and then the big bump up happens in FY23. I believe, just one small clarification out there, sir. Were you misquoted in a brokerage conference that while you will do $1 billion in FY23, you will do another billion, add another billion to it in the next 3 years? Were you misquoted there? Because I think it did the rounds of a lot of people's, including my platform, that you by FY26 maybe you'll be $2 billion. Were you misquoted there?
I didn't quote 2 billion revenue by FY26. We were only giving guidance of $1 billion in revenue by FY20.
Okay, so you were misquoted. Fair call. Just one last question, or maybe two last questions. There was some large rumor of FDA clearances pending. What's happening on the US FDA inspections, Dr. Chava? And while there might be no more pending FDA audits at this time, are you awaiting some key clearances for any of the units from the US FDA?
No approvals, no inspections pending. We had one inspection announced and not happened for our pilot plant in R&D. We went through documentation review and got a satisfactory letter from FDA 2 months back. So with that, we have no inspections announced and not carried out situation. So all our units were inspected, and there are no approvals pending because they have to inspect our site as of now.
Okay, so you are saying it's business as usual. There is not a single unit which will not be able to, how do I say, ship products, if you will, to that geography because of any communication pending from the US FDA.
We don't have any pending inspections or pending communication from FDA nearest. All units are compliant as per the FDA.
Okay, that's a big relief. And I think just one clarity, Dr. Chava, because I had completely missed it, but I had read a Sher Khan report which had clarified that there was no suspension in marketing authorization for products except for one. Can you just talk a bit about that? Because mid-quarter, I think you were compelled to make that clarification. What was that issue about, and what is the clarification?
See, in one bio study which we done with a CRO was went through challenges. Interestingly, we didn't launch that product in Europe, so there is no question of recall since we didn't launch.
Okay, fair call. Dr. Chava, one final question. I didn't ask you about the operational metrics at all. I know it's a small bump up for you. I mean, 150 basis points is nothing to write home about. But when I look at your Q2 numbers, the gross margins, I think, stayed pretty steady. It was the EBITDA margins which came off because of higher employee costs and higher other expenses, if I'm not wrong. Q4 onwards, when revenues return to normal, you think this bump up can happen easily? Because I think you've guided to 30% average EBITDA for the year, if I'm not wrong.
One should define quality of business. Quality of business on EBITDA, quality of business on gross margins. We do internally think gross margin is a great indicator of quality of business. Sometimes we invest ahead of requirement and we recruit people. See, when we put up a facility, we need to recruit people. So our EBITDA margin was less because of actually negative leverage. So we have a lot of pre-operative expenditure, more R&D expenditure. So from the beginning, we never capitalize any of the expenses. They will just go through our P&L. Our gross margins remained fairly stable, and we do expect they will remain at that level. So that way, we haven't done any less gross margin business. We haven't lost market share. We haven't lost customer. So the EBITDA is the number of how much we sell. Suppose we sell another 200 crores, we could have been EBITDA at 33%. So gross margin is the one we do believe is a great indicator of how much quality business we're doing. And we do believe the margins will remain in the similar levels in the future. And for the whole year, we have confidence that we'll achieve 30% EBITDA by end of the financial year.
Yeah, so average would be, I don't dispute, sir, the quality of the organization, certainly in the gross margin front, but because the EBITDA margins flow into the bottom line, I think that's why the street is also obsessed about those as well. You reckon 30% average can be clocked in for FY22?
Yeah.
Got it. Great. Dr. Chava, tough times, but I'm sure they won't last. And I think tough people last. So wish you all the best for lasting and blossoming by the end of Q4. And the best wishes for a happy Diwali and a prosperous New Year.
Thank you, Neeraj. As you mentioned, tough times are good for tough leaders.
Yeah, well, please show the demonstration very, very soon, Dr. Chava. Thank you so much for joining in.
Thank you, Neeraj.
Really appreciate your time.
Thank you.
Viewers, thanks for tuning in.
Thank you.